Hey everyone, Rivian is slated to report financial quarterly earnings results on May 7th after the markets close. And so I'll preview what investors should look for from Rivian when it makes that announcement. Additionally, I'll answer if Rivian stock is a buy heading into earnings, or if you should wait and buy after earnings, or if you shouldn't buy this stock at all. So I'll preview the earnings results and I'll provide a recommendation for Rivian stock. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the areas where investors have a good idea what to look for from Rivian is the production and delivery numbers, because Rivian already updated investors on April 2nd on these figures. They told us that they produced 13,980 vehicles and they delivered 13,588 vehicles in the same period. So these results were in line with what they expected for the first quarter. And for the full year, they reaffirmed their guidance for annual production of roughly 57,000 units, which they're on pace, right? 14,000 in the first quarter. You multiply by 4, that takes you to 56,000 units for the year. So they're on pace for their annual target. However, that disappointed investors because last year they gave an annual target to begin the year, but then they upgraded that annual target throughout the year and they ended the year much higher than where they said they were going to start the year at. So investors were hoping for a similar year from Rivian in 2024, which does not look like it's going to be the case. Additionally, Rivian is forecasting almost zero growth for 2024. 57,000 units is roughly what they produced and delivered in 2023. So this has become a zero growth company, at least for 2024. Maybe they return to growth in 2025. That remains to be seen. And that's something I'm going to be looking for from Rivian management when they announce quarterly results, is when do they expect to return to growth? Is this going to be a growth company, or is this the extent of its expansion at roughly 50,000 units? Now, another critical metric I'm going to be looking at is the gross profit per vehicle. In their latest quarter, that was negative 43,000 per vehicle. And remember, these vehicles they sell are, the SUVs are $80,000, $90,000, $100,000, and they're losing roughly 43,000 per unit. The trucks are a little bit less, you can say $65,000, $75,000. Still, to sell cars at $60,000, $70,000, $80,000, $90,000, $100,000 and still lose $43,000 per unit is troubling. It means the company has too much manufacturing capacity. It has too much built-in fixed costs that they need to get out of the system. They're working on that. They said they're going to have a shutdown roughly around the second quarter. I want to hear more about that shutdown to upgrade their manufacturing in the current quarter, how that's going, the progress on that front, how much cost savings they expect to achieve from that upgrade. I want to hear a lot about that because at the current pace, this company is not sustainable. It's not on a good path with the current product cost versus expense versus sales numbers. It's not aligned properly. I'll show you just how much money the company is losing on the bottom line a little bit later. So as I mentioned, they're going to incur additional costs associated with their planned shutdown and technology and design changes in the near term, and they do not anticipate these costs to be part of their normal course of business in the long term. So they're going to spend some money changing the product line, improving the manufacturing, changing parts to lower cost parts so that their cost of goods sold can improve. These are one-time charges. They don't expect that to continue in the long term. Additionally, I want to hear about their van. Their commercial vans have lower material costs driven by some of the tech changes made in the first quarter of 2023. The lower deliveries during the quarter negatively impacted their gross margin. So if they sell more of these commercial vans, their gross profit could be better because these cost less to produce and their gross profit margin is better in this segment. That said, Amazon hasn't ordered as many as Rivian was hoping they would order. They do have an order for 100,000 units, but they can extend those orders throughout several years. They don't have to order on a linear path per year, average it out, and make the same amount of orders every year. Partly because of that, Amazon renegotiated their deal with Rivian, allowing Rivian to have the rights to sell that commercial van to other businesses. So this is not exclusive to Amazon anymore. So far, we've heard of a couple of deals Rivian making on sales of the commercial van. Not too many, though, not as many as investors were hoping following the end of that exclusivity deal. I think AT&T was the most notable deal Rivian made with the commercial van. You would think by now we would have heard of more deals. I want to hear more about that when management reports quarterly earnings. Have you made any progress developing new contracts? What are the terms of those contracts? Is there going to be a meaningful improvement in deliveries of these commercial vans? Because remember, at its current facilities, Rivian has the production capacity to produce roughly 200,000 units, and they're only making roughly 57,000 units this year. So there's room to produce more vehicles. The problem is sales. They can't get people to buy these products at a price that is at least reasonable. I think Rivian would still accept losses on each one of the cars because they're losing so much. They would be happy to lose only 20,000 per car, right? But they still, even selling these vehicles at a loss, they can't get people to purchase them at fast enough quantities. Demand for electric vehicles, I've been saying for so long, is way less than many of these EV companies were hoping for and planning for. And that's led to some massive losses for many of these EV companies, Rivian included, which has lost more than 90% of its value from its peak. I highlighted earlier that Rivian is losing a lot of money on the bottom line with very little progress. In the most recent quarter ended December 31st, their loss from operations was 1.58 billion, and that was only a slight improvement from the loss of 1.795 billion in the same quarter the prior year. So when you're losing over $1.5 billion every quarter, you've got to make faster progress. Making roughly 10% improvement year over year is not enough. That's going to lead to significant losses and you're going to run out of money. Even though Rivian had a massive cash balance to start its business out, it had raised close to $20 billion from investors, and it has proceeded to use up that capital very quickly. As you can see, in the 12 months ended December 31st, they lost $5.7 billion in operations in 2023 after losing $6.8 billion in 2022. So just in those two most recent years, that's $12.6 billion that they've worked through to build out the business to bring it where it is today. Now they've made progress, they've increased capacity, they've increased unit sales, but it's just not happening fast enough. It's every year $6 billion is going out the door. You've got to make more progress, otherwise you're going to lose patience from investors that are not going to keep giving you billions of dollars to make 10% progress year over year when you're losing this many billions every year. So I'm going to look to see what management says about this progress. They did say they're going to achieve gross profit margin positive by the Q4 this year. I want to see the company reiterate that target. I want to hear more about their lower priced model that could potentially increase demand from consumers and increase unit sales, which could reduce those losses on the bottom line. And then we want to hear about growth. Is this company going to return to growth, or are they just going to be at this level from here on out because consumer demand just isn't there for electric vehicles enough to support growth for all of the players in the market? There's so many EV models now coming into the market. Every one of these EV companies can't grow. There just isn't room in the market for all of these companies. So troubling times to be sure. Rivian now selling at a forward price to sales of 1.151, the cheapest it's been in a long time. but it should have never been more expensive to begin with. I've been saying that for several years now about Rivian stock. I have not had Rivian stock rated as a buy. And going into the quarterly earnings results, if investors are curious if they should buy before the earnings, I would say no. If they should buy after earnings, I would say the way it looks right now, no. But perhaps something from the earnings report could cause me to change that recommendation. If the stock price were to fall by another 20-30% following the earnings results and the company continues making progress, that might change my recommendation. If they find that they're going to make much better improvements on the cost of goods line item following their upgrade from their manufacturing facility, that could change my tune about Rivian stock. So I need to hear a lot from Rivian in their quarterly earnings report to change this recommendation. For now, I would say no to buying Rivian stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.